Recording in progress.
Hello, and welcome to our live trading room. I'm thrilled to have each of you joining us today as we embark on a dynamic journey in the world of trading. Whether you're a seasoned trader or just starting out, this room is designed to be a collaborative space where we can share insights, strategies, and opportunities in real time. I'm Scott Barkley, your host, and this is probably the only time you will see me today. Now, throughout our session, we will be delving into market analysis, discussing current trends, and exploring potential trade setups across various asset classes, primarily in Forex, but also gold, Bitcoin, maybe S&P 500, and the Dow Jones. But more importantly, we'll be fostering an environment of learning and growth, where questions are encouraged and ideas are exchanged freely. You are at the place where you can earn while you learn. But before we dive in, I want to emphasize the importance of risk management and disciplined trading practices. Remember, the goal is not just to make profits, but to do so consistently and responsibly. So let's harness the power of information, leverage our collective expertise, and make the most out of today's trading opportunities. I'm excited to see what insights we uncover together. Now let's get started. So hey, if you're new here, pay attention to this video because we don't go through this information in the room, okay? All right, so I got to do this. It's the law. As you know, trading involves substantial financial risk. This presentation is for educational purposes only and is not intended to induce anyone to initiate any investment or trade. Your trading results are entirely your responsibility. So who is this guy talking? Well, that's me, Scott, on the left, and that's Jerry on the right. And Scott, that's me. I have over 2 decades of trading and training experience. I was a training consultant for FXDD, the second largest retail broker in the world at the time, for 3 years. I am the author of the Empowered Forex Trader, Strategies to Turn Pains into Gains. It's available on Amazon. Here's Jerry. Jerry is a math wizard and a coding genius. He's also the co-founder of ProAct Traders. He is responsible for software R&D and why we have the most amazing charts and ancillary tools to help us be successful in the Forex, crypto, futures, options, stocks, etc., etc. Jerry was a co-owner of Rock Software, a financial software company for Tier 1 bankers like HSBC, Bank of America, Paribas, to name a few. We are here Monday through Thursday in the New York session, Monday nights in the weekly Outlook room, and we look for our swing trade there for the week, and Wednesday for Platinum Traders at 1 p.m. on Wednesday. We are closed on Friday because it's Square Up Day. Retail traders should be flat. So why are you here? Kick a few tires. Yeah, sure. Replace your income. Supplement your income. Become a full-time professional trader. Elevate your lifestyle. What do we do here? Well, we teach price action without a reliance on indicators. We teach the methodology that the bankers, the big boys, use to manipulate the market to establish their daily agenda. They print that information in the charts, and we are adept at deciphering their clues and teaching traders how to do it themselves. Our software. We created our own charts that show these clues every day. This means our traders can create a statistically high probability trade plan for today. We never scalp, and our minimum opportunity is 55 or more pips, or we don't trade. Education never stops, and our motto is no trader left behind. We have other tools to help us know the movement for today, the targets for today, and how to press our winners without exception. Why we are different. Our methodology is different. We are target traders, and many of our traders make hundreds of pips a day. Our live rooms are interactive, a place to really earn and learn. Our business model is different. It is based on trader retention, and some of our traders have been with us 18 years or more. Our software is different. It comes with a preset chart for each pair already set up to target trade. It has momentum signals to identify actual money entering and exiting the market. It has special moving averages and tools to find optimum trading areas. We have target tools that are available nowhere else on the planet. So what are your results? Well, we have many traders who have started here and gone on to become full-time traders at banks, prop firms, and just by themselves. Our trading record is taken live by a third party and is published on our website. Seeing results live will tell you that you're in the right place to further your personal journey. If 2 or more traders take a trade we identified, either live in an info center alert or a session recap, then we count it. We only count their one largest trade since we always have multiple entries in a trade. Check these out. You can see here, Robert, 3 entries, 239 pips. We'll only count his 106. Thomas, 5 entries. We'll only count his 114. Kay, multiple entries for 748 pips. We'll only count her 152. So our record is very, very conservative. Some trade rules. An opportunity is only won if we have 55 or more pips to the target. We press our winners without exception. 85% of our trades are entry orders. We enter with only 1/3 of our lots on trade 1, and then we add to a winning position. We trade live. We don't show you trades after the fact. We will first eliminate all pairs that cannot give us a return on investment today. We will review the clues that make a certain trade ripe to cherry pick today. We will alert live the parameters of the trade setup, but we will never call a trade. That is your job. Enter when ready means that most, if not all, the entry conditions have been met. Very important. We always press our winners without exception, and that means that you must place your second trade, which is an entry order, of your trade plan first. Your first trade is usually a market order, but not always. We call this a snowman. Trade 1 is in the head. Trade 2 is in the body. Here's what the snowman looks like in the charts. We'll go up instead of down. Trade 1 is down here on the pullback. We enter with one market order with 1 lot. Trade 2 is the break at the top towards the target, and trade 2 is an entry order with 2 lots. All right. What about stops? Well, each trade is different, but we'll show you how to do that live in the room. Entries are always an even number. Stops are always an odd number on a 3 or 7, never a 5. Your goals to become a sustainable, successful trader are 65% win rate. Get this in your head. That means that if you're trading lights out, you will still lose 35 out of 100 trades. You need a 35 plus average pip capture, which you can't get unless you press your winners without exception. We are here to teach you to fish. If you give a man a fish, you feed him for a day. Teach a man how to fish, and you feed him for a lifetime. We're here to teach you to fish. Our focus is twofold. Use the charts to find an opportunity, and then use that live trade to teach execution. Help traders move to their personal next level on their journey to replace or supplement their income. Where's the trade, man? Many trades we identify may start in this session, but rarely finish in the session. If we get one that does, I will make a separate video of it. That does not change the trading opportunity as long as the dollar index is still provable. We will do a session recap at the end of the session, and it's a short recap video for our worldwide traders to watch later. As we're based in the United States, many of our traders are in Japan, Australia, New Zealand, Europe, London, all over the place. All right. So this video will be available in the Academy under New York Session Recap and in the Info Center, which is free to all traders to download. All right. So do you send trade signals? No, we are not a trade signal service. We do, however, send alerts through the Info Center to our subscribers, typically 4 per day, Monday through Thursday. These are heads-up trade ideas. They are potentially actionable, but you, the trader, must qualify them. Alerts are membership specific. Let's do a little housekeeping. No swearing in the chat or risk being dismissed. No sound, just log out and come back in. Please use your real name in the chat, not Big Daddy Forex Dude or the FX Chick, etc. We're a family, and so we use our real names. New to target trading, there are no dumb questions, so do not be intimidated in the room. Everything is recorded, and this will be available in the Academy in about an hour after we close the room. And we allow no discrimination of any kind. We have all races, religions, and nationalities in here, and we all get along. You will initially learn 4 entry strategies. First is the pole trade. It's the rectangle pattern, and there are lots of videos on our website about it. Then the next one is a break, hook, and go. Normally that's what we're looking for, or a close and reverse. And then if we get a large candle on a breakout, before you enter, let it center. As you progress, add the 6 aces reversal setup. It is for more accomplished traders and should not be attempted by novice traders yet. Wow, it's kind of overwhelming. Yeah, but it's a process. So heads up. First day's here. Be a sponge. Just listen and watch. You're a beginner. Ready to jump in? Start with the beginner's course in the Academy. Not a beginner, but ready to start? The first videos course is where you start. Ready to try our amazing charts? Take a free 10-day test drive. Our trade, if we find one, will be filtered by the ATR left today. The ATR is the average true range of each currency and is a critical part of our ability to capture monster pips. It is gathered every day by Jerry and put in the info center so it is fresh every single day. They look like this, all right? The ATR is the average daily movement, statistically, of each pair. We use the 14-day period, and we also track its historical movement for 6 months in arrears, so we can see if it is strengthening or weakening. So down there in the Euro New Zealand, bottom one there, you can see last week it was doing 136 pips every day. This week it's doing 138 pips a day. That's what we'll use for the target today. But you can also see that it's significantly lower than what it normally does, 150 to 153 pips with an average of 145. So if we had a target that was 15 pips further, we know that this currency can get there. So our first qualifier is, do we have 55 plus pips to the ATR target? If not, we pass on the pair. Why? We don't have any room. We can't press our winner. And this is the key to success in the Forex, cryptos, futures, etc., etc. So let's go in the charts now and see what opportunities are available to us. But today we have a fundie. That's a news event. P-flatten any pair that this fundie might affect. Predetermine the target of 55 or more pips. Wait for the reaction on the 1-minute chart. Trade only if the fundie continues the current structure. In other words, if you have a down channel, you are only a seller. It doesn't matter what it comes out, you can only sell it. Wait for 3 to 5 minutes for a sideways move or a new support and a resistance depending on direction. Our trades are entry orders, not market orders. We will review the process live. Let's go in the charts and take a look.
Good morning, everybody. This is Scott. Hopefully everybody's doing great. Morning, 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 morning. All right, we got a fundie this morning. We got jolts. So let me pull that up here. Got a lot of fundies this week. So first job will be to get ready for that. So let me pop them all up here for you. So there we go. So today is jolts, Tuesday. Jolts at 10 o'clock. Tomorrow we got ISM services in New York. We have ADP before class tomorrow. But remember, ADP can be a big number right there. So make sure you're flat before the New York session tomorrow. And we also got non-farm payroll on Friday. Won't affect us because we never trade on Friday. But be aware that the market will slow down after, most likely after ISM on tomorrow. Right. So be aware of that. All right. So this is the blog post. Oh, wait, that isn't the blog post. Blog post was the pound New Zealand and waiting for this breakout here. And we'll get a breakout here. We're looking for the 1270 fib down. You can see you got a channel below the MACD, zero line on the MACD. You got a T3 and a MACD break at the same time. When that happens, it's 82% going to go in that direction. The target is 20615, holding for 20600 down there. All right, there you go. All right, first up, dollar index. As we said yesterday, we're down here in the lower end, and we talked about it last night in the Outlook room that we need a pullback here. Now, we got to be careful here. And the reason you got to be careful is because this could be an A, B, C. All right. So we don't have that yet. All right, MACD is pointing the way to the upside. So, you know, if this continues on down and it's not going to be a C wave, then what you're going to see is the MACD is going to roll over like that. All right. If it is going to be a C wave, the MACD is going to continue up. So there it is. So remember, your job is to pull the clues out of the market. All right. Has nothing to do with my RBI, slow stochastic, all that crap that doesn't work. The only indicator that has any shot at telling you the future is the MACD. That's the only one. All other indicators are lagging. All right. So there you go. All right. So right now we're tentatively a seller, but we have been a buyer all night, and we might continue to be a buyer. So Jolts will probably solidify that. So let's go see what the charts say. We'll see if we have anything to do over here. On the euro dollar, we have nothing to do. And there's a reason for that. That's because the ATR is too low on the euro dollar to be effective. It's only 50 pips, right? So you got to have 55 pips or more to the target, all right? Let alone only 50 pips to start with, all right? So there's nothing to do on the euro, all right? Over to the pound. Pound is almost at target right now, as you can see. No, in fact, it hit it to the pip, right there, to the pip. So it's already hit target. There's nothing to do there, all right? He said, well, yeah, you could trade it. No, you can't. There's only, right now, even if it went back to target, there's only 12 pips there, all right? Forget it. Dollar Swissy is going to give us a hint on the dollar index, and you can see they're telling you, no, we're going down. All right, we're getting close on this dollar Swissy to being able to trade it. Can't yet, but it's 51 pips, so it is rising right now. All right, so but it's telling you we're not going to do a C wave. Now notice, it's all about grabbing the clues. I'm talking about the dollar index, but I'm not on the dollar index. I'm on the dollar Swissy. How can I do that? Because the Swiss franc is pegged to the dollar. It doesn't float against the dollar, it pegged to the dollar. That means it goes where the dollar is going. All right. So there you go. They tell us we're not going to do a C wave. So that's a big hint that we're negative on dollar today. All right. All right. Dollar yen. And we talked about this last night and it was a real estate of the week trade. Trade one was here. We got it. So hopefully you're in it. Now, this break of this bottom channel line tells you that they have adjusted the channel. So we're going to move it over to here. And sure enough, there it is. And how do I know that? They proved the heart line. See, if you don't have a heart line, folks, you are missing huge amounts of information. And you can't qualify what you think the market's doing without a heart line. You can't do it. All right. So anybody who's using MT4 is at a disadvantage. All right. Now, I think against an MT4, I use MT4 from my broker. All right, it's Owanda, but I don't use their charts. Their charts are worthless. All right, so on dollar yen, we have to either have a pullback or we have to have a pullback up here to go again, or we have to have a sideways move to go again. All right, so there's nothing there on that dollar yen either. All right, we can't trade the Aussie dollar yet because it's only about 53 pip ATR. We also can't trade the New Zealand dollar because it's only 47 pips. Okay, so all the ATRs are extremely low. In fact, I've never seen them so low. All right, and I've been trading 23 years. So, all right. So there's nothing for us to trade dollar-wise in the announcement, all right? But there is an indirect relationship on the all the other currencies, all right? So you can see EJ was an alert last night. I originally had it to the upside. That's because the dollar was still going down last night. But as we talked about last night in the Outlook room, the dollar needs a pullback. If it gets a pullback, this is going to break. And sure enough, it did. And of course, you can see it really, really rock and rolled. We'll pull this up to here, up to this top right there. Come on. And we'll flip it to the downside. And you can see it's already done its ATR plus 93 pip ATR. It went 93 pips plus another 120. So it went about 200 pips last night. We'll get rid of this because it's gone. And there we have it. Now you can see we're out of this range. Let's get rid of the range. All right. And perhaps we're trending. We'll see. All right. Let's go to the 240. All right. Trends are only found on a 240 chart. Well, you still have this big other range here too. Let me get rid of that one. All right. Remove. All right. So now I need fibs to the downside. So I'm going to flip these to here, right there. And sure enough, they're using them. They're using them. They're using them. They're using them. All right. See? So there we go. All right. Screamer to the downside last night, back down to the 60. And as you can see, nothing for us to do. It's already happened. All right. Euro yen. Pound yen. All right. Also, last night we identified this as our real estate of the week trade, trying to come down to 191.87. If you're in this trade, hold trade one. Hold trade one. And we talked about last night, getting up here to the double top and making a turn. What did it do? Up to the double top. All right. What was the stop? 15 pips. What was the reward? Monster. The reward is 891 pips. All right. So there. All right. Let me go back to the 60, and you'll see that we already did the ATR and then some. All right. So pull back up here, pound yen, 111 pip ATR. Find the 5 o'clock candle from yesterday, 1600 for me. We put the day chart high in after that right there. That's the day chart high. And what's the day chart low? The day chart low is going to be 111 pips down. All right. And plus in this case, because it rock and rolled. And there you go, easily. 3 times its ATR. All right. So any of you are in this trade, you are way up in profit. Move that stop on break even right there on trade one. Hold it. Don't try to protect this stuff right here. You need to give it room. What if it does an ABC here? All right. So they're going to continue to go down, up, down, up here. All right. If you try to protect this profit, you get stopped out. And now you're out of the real estate of the week trade. And now you got to start all over again. All right. So don't do it. All right. Nothing to do there. All right, over to Aussie yen. All right, Aussie yen. All the yen crosses rock and rolled. You can bet there was some intervention. When you see these kind of moves, there's intervention happening for sure. Let me get rid of this right now and this fib here. All right, we'll get rid of this up to the upside. It was a live trade yesterday. We were looking to finish the 5th wave yesterday. And as you see, with the intervention, it went the other way. All right, so we'll get rid of this. And there's no trade because of, let me get rid of this too. We don't need that. We don't need that because it's not doing a 5th wave anymore. Aussie yen, all the yen crosses rock and rolled. All right. And we've been anticipating that because as we enter the territory where the yen is weak, too weak for them, they're going to come in. All right. 73 pip ATR, find the 5 o'clock candle. We had a high after that, which is that. Then, you can tell that we did way more than 73 pips, about 150 pips right there. All right. So nothing to do there. It's already happened. Euro Aussie. All right. Euro Aussie follows the dollar index. Now the chart says we're going up. You can see MACD right here. All right. So are we going up or are we going to go down? All right. Well, we're going to follow that dollar. All right. So how do we tell that? We check the 3 musketeers. All right, so these three charts down here are Heikin-Ashi charts. They're not an indicator. They're a different type of chart. And they give us two pieces of information every day we can't get any other way. What's the order flow and who's in control of the currency? On the 240 world, the big boys got it. In the 60-minute world, the big boys had it, but might be losing it. All right, and the order flow was down just a little bit ago. We're having a little pullback here, all right? So now we then validate these three charts with the oscillators. Remember, an oscillator never tells you the future. It only tells you what the currency has done. In the 240 world, they've gone up. There it is. All right. In the 30-minute world, they've come down. There it is. In the 5-minute world, they're headed back up. So they're telling us we're going to try to go up a little further. All right. But we are at a distinctive top here. I'm going to take this fib off here. We need to pull this down for a minute. All right, you can see you're just in a big sideways move here. All right, so I would watch for the sell, not the buy. All right, especially with dollar going down because it's correlated with the dollar. All right, so we're going to do it both ways, and we're just going to wait on it and wait till it proves what it is. If this is an A, B, C, then we're going down. If this is a 1, 2, 3, 4, 5, then we're going up. Which one is it? We don't know yet. MACD says it might very well be a fifth wave of the upside. Now remember, it's a fractal wave. It's not a trend. All right. So we talked about that yesterday in class. 78 pip ATR. We find the 5 o'clock candle from yesterday, 1600 right there. Put a low in after that right there. And we're going up for 78 pips. And there we go. And we already did target. So there's no trade anyway because they've already done the ATR. It's possible to do the ATR up and the ATR down and then the ATR to the target. That's possible. All right. You saw it on the pound yen and the euro yen. But those are anomalies. All right. What does it normally do? The ATR. All right. So don't be a gambler and gamble that this is the one that is going to go. All right. Swiss yen made a turn. Remember, we talked about this yesterday. Watch for a double top. There's a double top. Okay. Why did we know we had to do a double top? Because they put the money in 2 times. Money came in here and money came in here. All right. So this money right here came out. Oh, excuse me. This money right here came out over here. This money came out over here. All right. So now we've taken out the support. We're good to go to the downside. MACD telling you you're going down. All right. Don't ever trade a reversal unless you know the money's out. All right. All right. So we're going to put HSI from the double top up here and to the downside. That'll measure the wave structure. And you can see they know right where they are, know right where they are. So there's a big wide open space here if we have any room. All right, MACD's telling you you're headed down. All right, I need a fib on here. I'm going to redo this fib, take this one off. I'm going up to the 240 chart because I need this swing high and this swing low for the fibs. So I go up to the swing high, go down to the swing low right there, and there we go. Stop. Do they know the numbers? Do they know the number? Do they know the numbers? Do they know the numbers? Do they know the numbers? You see, do they know the numbers? They do. All right, so there's the next wide open space right there. All right. All right. So let's see if we have any room to the target. All right. We can't get a fib on here until this finishes and goes down. All right. Let me get down to the 60-minute chart, and then we can get a fib for a 1,000 to the downside. But first of all, let's see if we can have any room based on the ATR. And Swiss yen has a 90 pip ATR. Obviously, that's the high for the day up here on the double top. We're going down for 90 pips. 90 pips. And boom, we did the ATR plus right there. Nothing there. Pound Aussie, all right? Pound Aussie just hit target just a second ago right there. And so it's done, already happened. And that was an alert from last night. We'll see how traders did on it. You're New Zealand, all right? You're New Zealand, and it's just hanging out here. So it didn't follow that pound Aussie up. It's just hanging here in a big flag, all right? With this much information now, that tells me I need to adjust the channel, all right? So I don't like to do that because it's really well built back here, but it's now telling me, you're not doing what it is. This is not what we're doing now. All right, so we're going to get rid of that. We're going to go off of this one now to the downside. And sure enough, proves the heart line. All right, so there you go. All right, so they know where the heart line is. That means they know where the bottom is. All right. All right. Let's see what the Three Musketeers say about it. And the Three Musketeers say, yeah, we're going down. We were going down. No, we're going down. The order flow's down. Confirmer says, hey, we just broke the T3 to the downside. We're basically going flat. No, we're going down. And we're right now going up, but that's probably going up to find sellers to go down. All right. So let's see if we have any room. We go over to the ATR, Euro New Zealand, and 90 pip ATR, find the 5 o'clock candle from yesterday, 1600. It's that spinning top right there. We put this high in afterwards up here. We go take the high. That's a day chart high. Where's the day chart low? 90 pips below. 90 pips below, and there we go. From here to here, do we have 55 pips? Yeah, we got 60 pips, but we have not broken this bottom. All right. So that's going to be a problem on this trade. What it does is it increases the risk. All right. So watch for the turn here. If you see a close in reverse, you're going to have to take it right away because otherwise you don't have 55 pips. We're going to go right up down here to the target, go up for 55 pips right there. And you can see you got it. You may have already missed it. See that? I may have already missed it. If you don't have 55 pips, you don't have a trade. Well, it's 54 pips. That's close enough. No, it's not. 55 is 55. All right. Why? Because of the fib sequence. All right. You think that they changed this? Oh, 54 is good enough. No, there's 55. There's 89. There's 144. 89 does not mean 90. 89 does not mean 88. It means 89. It means 55. All right. So don't try to cheat. That's cheating. All right, if we get a pullback up here, we do have an opportunity. It's a little dicey because they have not taken this bottom off here, but this is the trade right here, right there, and we'll hold to the S6 down here, all right? And the trade is here for trade 1 will be here, and then trade 2 will be here, all right? So that's a snowman. We love snowman because trade 1 is in the head, trade 2 is in the body. How do I trade it? 1/3 of my lots with 3 times the stop, all right? Trade 2 is always 2/3 of my lots. It is done with an entry order, not a market order. All right? You put the 2/3 in before you take a market order. When it executes, trade 1 goes to break even, all right? And then you hold for the target. As you get close to the target, it's a 1-to-1 risk to reward ratio. If I'm 12 pips away from target, all stops are moved to 12 pips away from target. If I'm 4 pips away from target, all stops are moved to 4 pips. Then I look at the candles. Big candles, I hold all the positions for the next target. All right. Little dinky candles like that. All right. I bank the 2/3 and hold the 1/3 for the next target. It's the same way every single trade. All right. So it takes 21 days to develop a new habit, and that's what it does. All right. 3 weeks. All right. Looks like we already missed it. Yeah, I got it. There it is. See, they already got it. See, they went to the 55 and they took it right away. See, you're not going to be here. I said, well, I need more confirmation. You got the confirmation. It's 55 pips with a break hook and go. All right. And you're in the go right now. And you say, I don't see a go. Well, when you see it happening inside the candle, you go to the 3-minute chart. All right. Now you see the break, the hook, and there's the go to the downside, close in reverse right there. Wow. Okay. It's already gone. Don't have time for it. If it pulls back up again, we would have an opportunity on it. All right. Pound New Zealand, it's a blog post this morning. It is in front of us. They have not broken it out. It is barely 60 pips here, folks. So you're going to have to take it. As soon as it breaks, proves it's going down and hooks back up, you got to take it there. I need more confirmation. You are not going to get it. That's all you got. It's the break and the hook is the confirmation. All right. The target is down here 20624 and ATR in Pound New Zealand is 102 pips. All right, we're going to hold for the 1270 down here. All right. So Pound New Zealand's on the table. Same thing. We need a breakout. All right. Hard to find a trade this morning. I had to go through every currency to find one. All right. All right, New Zealand yen also most likely an intervention. As you can see right there, we'll go up to a 240. We anticipated this. We had a triple top here with a rising wedge. They've been telling you we're trying to turn. And this is why you're not in a hurry to take a reversal. It takes a long time to make a reversal happen. All right. We do have a trade set up for it. Once it's ready to go, it's called a 6 aces. If you're an advanced trader, you can trade them. If you're a newbie, don't even think about it. People say, well, when can I trade them? When you've doubled or tripled your account. Well, why do I have to do that? Because only 20% of the money is made counter trend. 80% of the money is made with the trend, right? So reversals, reversal is a counter trend move until it becomes a new move, all right? If you can't double and triple your money when 80% of the money is made, you'll never do it when only 20% of the money is made. So New Zealand yen has only a 67 pip ATR, and you can see they easily did that from the top here. All right, 67 pips. And boom, right there. It's easy. All right. They did double the ATR. So the good news is the ATRs will go up tomorrow because of these on the yen crosses because of these big moves. All right. We can't trade Aussie Swissy. We can't trade Aussie New Zealand. Aussie Swissy is 41 pips. Aussie New Zealand is only 8 pips. But we can trade the pound Swissy if we get a chance. And it's very tight, only 63 pips. So you don't have many pips to play with here. All right, because you got to have 55, right? So let's just see if we have anything left. We're looking at this 5 o'clock candle right here. We put a high in there. We take the high and we go down for 63 pips. And you can see they already did it. It's gone. All right, easily went to it right there. All right, and XAU for Abdul. Let me go over there. I mean, yeah, gold, right? Now look at, all right. So see how how this is coming down. Remember, dollar Swissy predicted that. It wasn't here. You couldn't predict it from here because this is still a possible ABC. But dollar Swissy said, we're not going to do the C, right? All right, over to the XAU, pull it up here. And as you see, Abdul, we went right to target yesterday to the pip to its ATR, all right? All right, dollar going down, we should have another move up. You're making a higher low right there. But you have a close and reverse to the downside and a zero line break to the downside. Now, if dollar's going down, this is going to flip. So we're going to look for that when, so we find the 5 o'clock candle from yesterday. 1600 right in here, right there. And yeah, there we go, right on that spinning top. We put a high in after that. We're going to put it down and then we're going to put it up. Sell for 358 pips. 358 plus the 0, so it will show up on the charts. There's not enough left to trade it to the downside, okay? Now, once it stops, if it bounces, we'll go up for 358 pips to the upside because that will be the new low for the day and it'll be up in here somewhere, all right? So you might, if it does flip, I'd look for that double top right there. That's what I'd do right there, okay? So this hasn't stopped yet, so I can't do it. All right, out of all those currencies, we have 2. Euro New Zealand and the pound New Zealand. All right, Euro New Zealand, we got to get another move to the upside. Let me put the 55 pips back on here so I'll make sure I got it. All right, no, so this is why this is the default. See, it's the default in mind for 55 because I got to do this 40 times a day. All right, so there you go. So, and if you do not have 55 pips, that's a wide open space. You do not have an opportunity. Wide open spaces. Make sure you have one. 55 pips or more. Hold on just a minute. Excuse me. I had to sneeze. All right. If it pulls back up here, all right, now we really don't want to take this before the announcement, which is in 6 minutes. So don't be in a hurry here. Thank you very much, Mark. Don't be in a hurry here, all right? It's flirting with this 55, but it may go up with the announcement. Remember, it's not directly related to it, but 88% of everything you see in the chart is affected by the dollar, all right? So let me pull that up, all right? So I took this picture. It's 5 years old, but we were doing $6.6 trillion a day then. Of that $6.6 trillion a day, $5.8 trillion was in the US dollar, or 88%. All right. So it affects every single currency except for 12%. All right. So know your stats, know what you're doing. Do not be a gambler. Be a trader. A trader knows the stats. A trader knows the statistical probability. A trader knows the statistical probability of what they do and also the statistical probability of what the bankers do. You say, well, how do I learn it? It's called price action. How can I learn price action in 3 days? I can't. I can't learn it in 3 weeks. Price action is going to take you a while, but you've got to learn price action. Otherwise, you have only one choice, which is to use indicators. Indicators lie. They're only 50% correct. All right. So that means that 50% of the time they're lying to you. All right. So if you trade that, you're a gambler. You're not a trader. You're a gambler. All right. But don't be a gambler. Learn price action. Oh, yeah, but I just want to trade. Yeah, everybody wants to trade, but you got to have the basics. All right. I can't go to the Olympics unless I do the basics, and I spend years doing the Olympics in gymnastics or whatever it happens to be, getting ready for the main event. Right? I can drive a car, but I can't go to Monaco and drive in the Grand Prix. All right. I don't have the skill level for that. Well, it's still a car. Yeah, it is a whole different type of car. All right. So it's the same thing here. If you use something the market doesn't use, you're gambling. The market doesn't use indicators. None. They don't even use a MACD. We use a MACD because it helps us, because our MACD setting gives us an 82% correct assessment. It's not 100%. All right, so that's the most likely trade right there. All right, then you got the pound New Zealand right here. If we can break this, now this is really tight also. All right, very, very tight, because we'll find the 55 pips right here, and we got to have 55s to the ATR, so we got to find that, but we would not target the ATR today. We would target the 1270 just below it. All right, so you can see there's 55 pips right there. All right, so any breakout up here gives you this opportunity here. All right, and this is the whole trade right here. If it goes, we're looking for the 1270, not the ATR, but we'll move our stop at the ATR. All right, if it breaks to the downside, trade 1 is here and trade 2 is here. All right, 1/3 of my lots, 2/3 of my lots, 3 times the stop. All right. All right, we got 3 minutes to go to the announcement. Let me pull it up here so we can watch it. All right. All right. Where are we at here? Oh, hold on. I don't want all you care about is high impact. There we go. All right. 2 minutes and 6 seconds to go. All right, on Jolts. It was forecast at 8.3, and it last month it did 8.49, so it did less last month. All right, and on your ATR, on your IC, if you're new here, go get this thing. That's free. All right, there's a cheat sheet right here. Pull it up. What does it say? Jolts. We don't even have Jolts in there. All right, so we don't have Jolts. But these are the major ones. If it's deviated by this much, this is what the average movement is. All right. So we don't have Jolts in here. All right. So let's get right. Oh, wait. That's a fairly new one. All right. 2 minutes to go. Back to this. Here we go. 1 minute and 14 seconds. All right. Some of you on Forex Live, you will get it before I get it here on Forex Factory. So go ahead and get it if you want to and post it in there. 40 seconds. We don't have anything to trade in it, but we're waiting for a reaction over on the 2 currencies that we could trade. All right. Pound New Zealand is the better trade. Euro New Zealand is just, both of them are tight, very, very tight. They only got 65, 60 pips left. So you got to be right on top. So that first slug on this announcement could ruin our trade for the day. 15 seconds. 10, 9, 8. All right, waiting for it. So we need it to come out negative. So less than 8.37. All right, it's taking this time. Come on, let's go. By the way, I got a mosquito in my office here. If I see him in front of me, I'm going to try to kill him, but it might make a big, as I hit him with my hands. 8.059. That's less than 8.6. Yeah, there we go. So it is negative. That's good. All right. So let's see what kind of reaction we get. You're getting a reaction there for sure. And look at the reaction here on the dollar index. See, dollar going down. So we're no longer doing a C wave. We now got a catalyst to the downside. We don't have a lot of room down here, but we got enough for today. All right. So there's your New Zealand. Remember, there's the first push to the downside right there. We got to pull. We got to have 55 pips. Look how big that candle was. That was a 25 pip candle right there. All right. Now we don't have 55 pips. Remember, I told you this is so tight that we might not even get a trade this morning because of that. Pound New Zealand, however, that's why it's the best opportunity because it's got a breakout and hook back up. So Pound New Zealand is the best opportunity this morning. All right. Let's go down to a 60, and you can see there's the break and the hook, break right there. Let's hope they take this out, but at least with a wick down in here would be nice, and then pull back up. Once they pull back up, you're looking for a close in reverse, all right? And you're not going to be able to wait till it finishes. Going to look like that, might look like that, might look like that, might look like that, all right? They do them all the time, might look like that, all right? What do they got? Yeah, there's 5 different versions of a close in reverse, all right? But they're all movement against the trend and a movement with the trend. All right. Stopping at the exit on the up move was exactly the same. Exactly the same. Exactly the same. Exactly the same. It's called a close and reverse, and the only people who can do them are big boys. All right. So we're waiting for we have a candle out now. Let's just hope that they break that fib and then pull back up. If we see them break that fib, that would be sweet. Now, if they don't, all right, if they don't, go down to a 10. All right. Now, notice we're trading the 60-minute chart. We're just looking for an entry on a 10. All right. Where do most traders trade? On a 5-minute chart. They might look at a 30. That's crazy. We got to have a pullback here. That's the breakout. All right. So you got to have a pullback up in here. Then you can take the trade. Now you got about 70 pips. And you'll make about 150 pips on this trade. All right. So 150 pips. Let's go figure it out. Back here, let's go to the trip calculator. All right. Our entry is going to be back up here at 206.90 if we get it. 206.90. All right. Our target is 206.15. 206.15. All right. So there we go. And our second trade is going to be first trade is 75 pips, so we've got plenty of room there if that happens. Second trade is going to be at 206.76. 206.76. Once we get a pullback, all right, we don't have a pullback. All right, so we're going to make almost 200 pips, 197 pips. All right. There you go. Fast trackers. You could actually trade this with 3. Get the pullback, trade 1, trade 2, trade 3. All right. So what does that mean? Then you would add a position below 206.50, 206.50, and you will make 302 pips. Same trade, same trade. So not too shabby. That's why I say it's a good trade if we can get it. But well, okay, we pulled back up. We took the fib out and we pulled back up. All right. So now that what they're doing is inside this candle. All right. And remember, there's no dollar in here. Why are they reacting so strong? Because 88% of everything you see is affecting here. The euro is reacting to that dollar. All right. I mean, the pound is reacting to the dollar. All right. So now we had a break and a hook. We're back up in here. Next movement out is your opportunity. It's still a little dicey. It's still a little dicey. So watch for the push button. Now, you can place an entry order here. All right, you can place an entry order below these fibs, these lines right here, this little spot right here, that close and reverse. All right, so that is at 206.901. So you can put a trade in at 206.90 for a sell stop, and you already got your trade two in. If you don't have trade two in, you can't even make the trade. Remember, it's a rule. I make trade two first because it's an entry order. It's going to take a little bit of work on my broker station to put it in. All right, so I make trade two first. All right, you can't make trade two later on. All right, things will be happening too fast. You'll miss the opportunity. So 206.90, you can trade it. Sabitri, he loves to do these things. Oh, he's not here today. Saeed, check your spam because I sent a email to you yesterday. And by the way, your email bounces all the time. Just letting you know. It bounces all the time. Having trouble. All right. You may have blocked me at some point in time. Not that I would ever be blocked on purpose. I know, Saeed, but you may have inadvertently blocked me because when I send you an email, it comes back saying it was undeliverable, which means most likely that you said don't deliver it. All right. All right. Don't forget, now we're doing this all with entry orders 206.90, 206.76, and fast trackers 204.58, 204.98. All entry orders to the downside. See what the Euro New Zealand is doing. Ah, there we go. All right. Now we got the Euro New Zealand. We're up above here. Okay. So watch it. All right. Watch for the turn. Can I trade this with entry orders? Yes. All right. Once it gets up here high enough, you can put an entry order right at the 55 pips, which is at 1.7618. But you got to be up here high enough so the broker will let you put that in. All right. Trade two is below here. And I would put it at 75.98, 175.98. That gives you the snowman right here. Trade one. Trade two. You got to find a snowman. All right. Why do you got to do that? Because the way I trade is 1/3 of my lots and 2/3 of my lots. All right. 1/3 with 3 times the stop on a 10-minute chart. When the 2/3 is entered because it's an entry order. So as soon as price hits it, it's going to enter. This trade has to be moved by the trader to break even. All right. Then and then the currency goes down here. And when it breaks this bottom into this area, move all your stops to right above here, right above there, and then hold for the target. And as you move down in here, it's a 1-to-1 risk to reward ratio. All right. And you're going to hold for 1.7546 right down there. All right. Simple, simple, simple. Don't ever change the way you do it. All right. All right. Now we don't have 55 pips anymore. See that? No 55 pips yet. Now we had to take it up there. It's still dicey. It's still possibly pushing up. So, not in a hurry. Don't ever be in a hurry. All right, here we go. All right. We're pushing through again. All right. So if you got your entry order in, you just got to take it in on trade one. All right. That red arrow popping in there, that's an order. Big orders coming in right now. I'm in it. I'm in it, but I'm in it only because I can't watch it. I'm talking to you. All right. So I'm in it early and I know that. All right. That's why I can't trade a big account anymore because my focus is not on my account. My focus is on your account. All right. So I don't trade a big account, but I do trade it live every day. So I'm trading live. I'm in. But I'm not in there with. I used to have a $300,000 PAM account. I'm not trading a $300,000 PAM account anymore. All right. All right. We'll see what happens here. While we're waiting, anybody have any questions? I'm happy to answer them. That's what we're here for. You're here, especially if you're here on an open house. If you have questions about price action or things like that, you need to take advantage of the time you're here. All right. I'm happy to answer them for you. If I don't know the answer, I will say, I'm sorry, I don't know. But if I do know the answer, I will not only tell you the answer, I'll most likely show it to you. So you can visually see what I'm talking about. All right. We may tag this line first again. Now, if we tag the line again, and you see a close in reverse right there, you may want to take that. Now, that's an aggressive trade off here because you haven't broken through here. You did on here. You have pretty good information that you are going to break to the downside. So because you opened and closed the candle below this line. See, opening and closing a candle in the Forex is a big deal. Opening and closing a candle is a big deal. All right. I can prove that to you. Let me bring up, this is Greg Michaelowski's chart, a chart from him. He is a bank trader for 12 years. He's at FOREX Live. Most of you know him. And I traveled with him for 3 years. You think I learned a little bit about how bankers trade with 3 years with a bank trader? Maybe. Uh, what's he got on his chart? 100 EMA and a 200 SMA, moving average. That's it. What else you got on? Levels. What are they? Fibs. That's all he's using. All right. So you come down here and you see here that they set a support, that slope support right there. Right there. You see the three dojis? They opened and closed the candle below there. That told everybody we are going down. Now, did they go down from there? No, they went up to find the sellers, just like they're doing now in the pound New Zealand and Euro New Zealand. When they go up to find the sellers, the big boys put an entry order in below these three dojis right there. You can see it right there. Now, so notice what he says. Price has moved below the 1.0400 level. This level was held. Here it didn't. Now, you see, it's not much. It's only 1 or 2 pips right there. That's all it takes. 1 or 2 pips. And now we're going to the downside. All right. Wow. Yeah, because that's price action. Okay. Here we are. We're back up to the top like I thought we might do. All right. And we'll see. You get the turn here. Fast trackers, you might want to think about it. All right. Let's go see what the dollar's doing. All right. Oh, the dollar's going. Yeah, we went down, but maybe we are going to do that C wave. All right. Let's go look at the dollar Swissy. All right. Dollar Swissy, it is pulling up, but it's not showing a C wave at all. It's just showing a little pullback here. So, it's just not clear yet. All right. We'll see. We'll see what they do. Now, if they do, that's an A, that's a B, then a C wave would go up here. How far would it go up? You have your Fibonacci extension key, click on the swing low of the A wave, the swing high of the A wave, and the swing low of the B wave, and the C wave will end up here. So if they're going to do a C wave, they're coming up to here. Now, you can see that's quite a ways. All right. Now, why would they do that? They're trying to go down. Why don't they just go down? Because they don't have a lot of room here. But from here, they'll have a lot of room. All right. So they may very well want to go up there to get that. Well, why are they doing it? Because they're manipulating the market for the most profit for them. If you figure them out, you can make the most profit for you. All right. Well, yeah, but my slow stochastic ain't turned over yet, man. My RBI ain't done nothing yet. No, all that is BS. None of that works. Get rid of it. If you got it on your charts, throw it away. Hurry as fast as you can. Throw it away. and embrace price action, because that's what the bankers do. They do not trade the junk that retail traders do. That's why they call us the dumb money. I'm not calling you the dumb money. Bankers call us the dumb money. All right. So we're in a holding pattern. We're waiting right now. Except for me, I'm already in. I'm down 15 pips, but that's all right. No big deal. Yeah, you can see the wick. All right, what did they find? They found sellers. See, they found sellers right there. What do you want to do with that? All right. You could wait 5 more minutes and see where the next candle opens. That would be a smart thing to do. If you're a little bit more aggressive, Daniel, for instance, Daniel was probably already in it with 25 lots, but but there we go. So you see, they found sellers. How do you know they found sellers? Because we got a wick that's selling inside the candle. Are you sure? Let's go down to the 3-minute chart. There it is, selling inside the candle. What am I talking about? There it is. Are they selling inside the candle? They're selling inside the candle. All right. So there we go. All right. Coming down nicely for me now. Down 5 pips now. All right. Back up to that 10. All right. Don't forget, we got entry orders in here going down. This is all 85% of your trades need to be entry orders. There's Daniel. The Euro New Zealand and Pound New Zealand are not my horses. They tend to buck this cowboy off and kill his scouts. There you go. Yeah, it's a volatile currency. Got to know thyself. There you go, Daniel. All right. We only have 2 opportunities this morning, folks. And so we got to figure out 1 or 2. 1, maybe 2 of them we could trade. We're getting good signs on here. It's doing the things we want, finding sellers. I'm a seller. I want them to find sellers. They're finding sellers. They're finding sellers at levels. See that? They know where the level is. So do I. Right? Your job is to find that level. Where's the next level? Right down here. Where's the next level? Right down here. You see, they knew where that was right there. Absolutely. Where's the next level? That's the ATR. What's the next level? The 1.27 fib just below it, which is our target today. Moving our stop at the ATR. So I can take this off because we definitely have 55 pips, so we're good. But she's having trouble breaking this thing, all right? And the reason she's having trouble is because that dollar is hinting that they may do a C wave up, at which case they would follow up most likely to here if they do a C level, and then the trade would happen. So what does that tell you? You know your stop has got to be above this line right here. Got to be above that line. All right. Well, is that all right? Yeah. Yeah. This is my risk. This is my reward. So I got a 1 to 2.5. All right. See that? So the risk is fine. All right. Just because you have a trade setup does not mean you have a trade. You only have a trade setup, or you only have a trade if you have a trade setup and reward for risk with that trade setup and the ability to press your winners without exception. The key to being successful in the Forex is not finding a winning trade. Anybody can find a winning trade. It's finding a winning trade and maximizing that opportunity by pressing your winners without exception so that your pip capture goes up above 35 pips. If you're trading for 5, 8, 10 pips, your average pip capture is 5, 8, 10 pips. All right. So this trade for a advanced trader is a 302 pip opportunity. For a newbie, it's 197 pips. None of that's 5, 8, 10 pips. We're not here for that. All right. So don't forget it. You say, well, a trip calculator is cool. I'd like to have it. Good. Go get it. All right. I'll put the link in here. Hold on just a minute. Yeah. Daily pictures. Why can't I find it? And we'll give you the ATR for 30 days, by the way. You get the ATR for 30 days included in that. All right, working good. I'm down 1 pip right now. Woohoo! Go, baby, go. Now, you notice that it sort of did what I said it was going to do. Why? Because I've been trading 23 years. I've watched the market move. I've learned how they move the market because I trade price action. I only trade price action. All right. The only indicator I care about is this MACD. That's it. All right. MACD points the way. MACD is pointing the way. What did it do? It's rolling over to go to the downside. All right. Structure is to the downside. All right. So that's why this is my trade today. All right. And it's not as tight as the Euro New Zealand. Euro New Zealand is pretty tight. Now, will I win on this trade? I don't know if I'll win on this trade. I'm just putting the odds in my favor. All right. Done all the work, did all the analysis, come to the conclusion that I'm a seller, and now I'm in the sell. We'll see if we go. All right. Once this gets up and finally decides to go, it's a pound New Zealand, and it can rock and roll when it decides to do so. So be ready. We'll see. What's the Euro New Zealand doing? Well, they found sellers also. See, the structure is down, target's down here, but we don't have 55 pips anymore. See that? There's 55 pips. We got 50, 52. Right? We don't have a trade unless they're above, equal to or above this line. So what do you want to do? If you want to trade it, you want it to go up. Why? So they can find some sellers, and maybe they'll find enough sellers for you to get a trade on. So now you're above this line. Once you get 4 pips up, I would trade it with an entry order here and an entry order here. All right. That's why I would trade it. Why? Because you're not going to get a chance to figure out. No, I'm not sure. An entry order right on that 55. So it's got to push up here far enough for your broker to accept that. All right. It already pulled up once, so that may be it. And you can see the trade is in right here. We're going to hold for the S4 below it right there. And trade 1 is here. And trade 2 is here. Right there. Very simple. All right. All right, now you got to go a little higher up here. Now you can also take it as a market order, especially if you tag these 2 wicks over here. You might want to think of a market order there. All right. Now I'm not calling a trade, by the way. I'm not calling a trade. I'm showing the parameters of the trade. I'm showing you how you would look at the market, how you would make a decision. I'm not calling this trade. You call your own trades, not me. I'm just showing you the parameters of the trade, what to watch for. All right. We're not a signal service. You have to be licensed to be a signal service. I used to be. I don't want to be anymore. All right. When I was a Series 3 guy because I had to have that for this. We had to have that for the PAM account. The SEC sent 9 people down to our office. 9 people. Why? Because we were in Austin. And all these 9, they were all 24, 25-year-olds. And 9 of them came down because they wanted to party in Austin. That's what they wanted to do on the SEC's nickel. And they came in and they spent 4 or 5 days with us. I think it was 4 days. And they went through everything we had to make sure we were copacetic. And then they said, okay, you see your website there? You cannot change anything on that website unless you get permission from us. Well, I change the website every day. I said, well, you got to be kidding me. I put stuff on that. You can't do anything. You can't do it. We have to approve. As SEC, we have to approve every change you make. So when I got a chance to no longer be that, I got rid of them. And I no longer want to do it. You know? It's a little bit what we call government overreach, which our government and nobody else's government does, I'm sure. They're definitely doing it in Canada right now. Golly, Larry, they're just nailing you guys up there. Yeah, exactly right, John. But Trudeau is going pretty crazy over there, up there in Canada. Yeah, thanks for reminding me. Yeah, as if you didn't know. You know, well, we're flirting with this one. While we're doing that, let's go look at pound. Well, we're going back up again. All right. See, they're not getting enough sellers to go. Uh, they took your account back in 2011. There you go, John. They're nasty. And that's why I don't want to do it again. I don't want to trade for anybody anymore. I want to do that. They drove me nuts anyway. All the big investors I had never had say, just let me know what you did at the quarter. All the little guys every day to send me an email. How much did you make me last night? How much did you make me? How much did you make me? And it got to the point where I finally called some buddies who are also PAM account administrators. And I said, what do you do with these kind of people? He said, well, here's what we do. When we get them 3%, we shut their account off for the month. Get them 3%. That's 36% a year. They can't go anywhere at 36% a year. But you don't have to deal with it anymore because you're going to shut them off, shut them down at 3%. So they capped it. We would cap them automatically. Right? All right, we're back up here now where we should see a turn again. They should find sellers. Let's see if they get it. They're going to get them. They're starting, see the wick? They're starting to get sellers. See, every time they come up, why? Professional sellers sell at the top. Professional sellers sell at the top. They sell at the top. They sell at the top. They sell at the top. All right. Dumb money sells at the bottom, sells at the bottom, sells at the bottom, sells at the bottom, then lives through the pullback or gets stopped out on the pullback. All right. See, that's why you don't want to do that. All right. Learn to trade price action. All right. Learn to trade with entry orders so the currency proves its intention. That's why 85% of your trades need to be entry orders, not market orders. All right. The only trade you want to ever have a market order on is trade one-third of your loss. And if you can do it with an entry order, even better. Let's see what the dollar's doing. Now, it's still pushing down, and not much effort to go up and do a C wave, but we got to be careful of that C wave. It's a pretty good move up there, right there, as you can see. All right, we're back up here. And why are they able to keep coming back up? Because the dollar keeps isn't going down. As soon as that dollar flips and goes down, this is going to follow. All right. What's the Swissy doing? Remember, Swissy validates the dollar. All right. When we get a chance to trade it, we will. It's a great currency to trade, as you can see. Pretty easy to trade. The problem is it doesn't have 55 pips. All right. So it's off limit stuff right now. Well, yeah, but there are people trading. Yeah, there are people trading it. They're gamblers. There's a lot of gamblers out there. 90% of retail traders are gamblers, and they wonder why they lose because they trade indicators and they don't learn price action. And they're binging on video. Binging videos is the worst thing you can do, folks. Watching a video and then going and do the lesson that the video said was explaining, that is a good situation. Notice the flag here to the downside, flag. Can everybody see the break hook and go right there, and then down we go, right? Do they know the fibs? 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 They know the fibs. So remember, the fib is a contested area. That's a contested area. Now, sometimes they blow right through it. Well, by the way, that's going to be a square up in the future. Right? I'm going to put that on while I'm thinking about it. So it's a square up. You don't know anything about square up. There's a video in the academy on square ups. But square ups means that they took buys, and then when they broke here, they didn't hook back up to get rid of the buys, then go. All right. So they own these buys. Yeah, they stopped everybody out, but they now own the position. They took they now own an underwater position. So at some point in time, when they get done down here, they're going up and get these buys out over here. All right. That gives a trading opportunity for our traders back up to the square up. That's why you want to watch them. All right. So, well, you know, I don't see there's another one up here. Look at that, man. We got all over the place. Two square ups on this thing. All right. So I'm going to see if I can find one for you that will show you how they come back to them. So you got one right here. See how that big candle went flying down? I'm just going to put a line on it here and see. All right, now that when it turns to the back up to the upside, that's the target. All right, let's see if they get there. To the pit. See that? Did they know where it was? They knew exactly where it was. Notice how they're there, and immediately there's a close in reverse. Why? Because they're exiting these buys up here, right in here. Buys, buy. All right. See, the candles went up. They took buys. All right. You say, well, how did they do that? Well, if you want to sell the dollar Swissy, will the broker let you do it? Yep. If you want to buy the dollar Swissy, will the broker let you do it? Yeah. They don't care which way you go because they're going to make money anyway. They don't care. And they know that 90% of retail traders lose. So it's 90%. We're only taking a chance on 10%. All right. So if they're an ECN, and you better be trading with an ECN, if they're an ECN, they immediately transfer that trade to the broker, who will take either a buy or a sell also. And the banker prints the candles. Right? Okay, let me set that up here. Let me put that in my contacts, Saeed. Just a second. Are you back in the UK now, Saeed? Did you go back? Are you back in the UK? Yeah, no problem. Okay. Okay. Must have been I'm thinking of somebody else. Oh, find you here. I have the same email. I have the same email. So I just sent it to you again, Saeed. All right, so check your email because I just sent it using their same email that you just gave me. So we'll see if that one goes through. It appears that you inadvertently blocked me. That's what it looks like. So you might want to check your blocked people who you blocked. All right. So there we go. All right, pound New Zealand. hanging out up here. What's he going to do? All right. The longer this takes, the less I like it. The less I like it. All right. But what they're telling you is, first of all, we have no buyers above here. And anytime we get into this area right here, we immediately turn it down, turn it down, turn it down. So if they break up in here, they immediately turn it down. All you got to do is look back here and see it. All right. Bankers do what they've always done. Bankers do what they've always done. Therefore, if I'm going to trade with the bankers and if I'm going to trade the Forex, you have no choice. I have to trade what they trade. I have to know what they do. All right. Well, the average retail trader has no clue what the bankers are doing because they're trading an indicator. Yeah, but don't they trade a slow stochastic? Nope. Don't they trade a RBI? Nope. Don't they trade with a RSI? Nope. What about that Hachi Hichi Hachi Hacha Hakamuko thing? Nope. And they don't even use a MACD. They use price action, period. Learn price action. Just got a zero line break to the upside. Now, would we consider this a pullback or do we consider this a continuation? We consider it a pullback. Why? Because the dollar, it follows the dollar. You got to know your correlations, and this is pushed up here. So it's just following the dollar is all it's doing. Right? But we could get a move all the way up to here. Right all the way up to there, which means that not pound New Zealand, we could get a move up to here, up to here. So what does that tell you? There are no buyers above here, as you can see, no buyers. So that means my stop's got to be above here, right? That's it. It's only 1/3 of my lots. I can take 1/3 of my lots anytime I want to. Anytime I want to, I can take 1/3 of my lots because I'm only risking a very small percentage of my account. But because I'm only risking a small percentage, I have to have the place where I enter trade 2, which is below here. Otherwise, I make no money. If it goes, I only have 1/3 of my lots. I don't make any money today. That's why I got to have 2/3 already in play for the downside if I'm going down. And it's just the opposite going up. All right. So we'll see what happens here. And the reason he's having trouble going down is because the dollar is having trouble going down. All right. So they're related. It's correlated. That's just all there is to it. So you got to memorize your correlations. You do have this on the IC. This little graphic right here is on the IC. Pull it up and print it off and paste it to your monitor and until you memorize them. All right. So pound New Zealand, half the time it goes with the dollar. Euro New Zealand almost always goes with the dollar. All right. It's not 100%. Nothing's 100%. All right. But it's typical. All right. So you got to know what they are. All right. Okay. Well, that's good to know, Larry. Thanks. 1,000. I got 10. You got 16. Yeah. It depends on what you clicked on, I guess. Oh no, I got 16. Yeah, I got 16 too. Yeah. 16. Okay. Yeah. So we may go up to this 1,000 right here and make the turn. All right. What would that be then? Oh, wait a minute. That's going to be an A, B, C. That's right. Going to be an A, B, C. What's the purpose of doing an ABC? A, B, C to continue down. All right. What's the purpose of doing an A, B, C to continue down? What's the purpose of doing an A, B, C to continue down? All right. They've not been successful, but they're trying. All right. So watch for that turn at the 1,000. That's at 16. I'm at 08. So another 8 pips. All right. 8 more pips, and we'll probably see it turn at the 1,000. Now, for those of you who are advanced traders, remember, you can take 1/3 of your lots anytime you want. You can take that trade. That would be trade 1. This would be trade 2. Then this would be trade 3. And now that trade's going to make you 300 pips. Are you willing to risk this little bit right here or this? That's the question. for that? Would you be willing to risk this much money for that? If the answer is yes, you place those entry orders now. You don't play if you're not willing to risk it, then don't do it. Right? Well, I need more confirmation. That's always the problem with traders, and that's why they're lagging. That's why they are late. They're always late to the party, and because they want more confirmation than what the chart is giving them. Right? They want a trade that is absolutely going to go. Well, I'd love to see that. You know, I've been trading 23 years and rarely seen one of those. Rarely, maybe once, twice in 23 years. All right, watch for them to hit that one down. They will not be there long. All right. Could I put an entry order there? Absolutely. 207.16. You could put an entry order there. The spread will take you in and you'll be going to the downside. All right. Now, what have I risked now? If I do that, I've only risked this much right here or that right there. Wow. Is that a good reward for risk trade? Absolutely it is. What am I looking for? Close and reverse at the 1,000. All right. Do I wait for it? If I'm a newbie, I wait for it. Why? Because I don't have the skill level yet. If I'm not a newbie, hey, I take it. All right. Hey, Jerry's here. Speak, oh wise one.
I just popped in to make sure everybody's okay. Technically, I think everybody's up and running and in the room. We got a bunch of them in there. So I'm glad to see everybody's here. I don't know anything else. I hope the market's moving. I tried to get it to start up and run today, get it off of old diesel and get it on some high octane jet fuel. So maybe it'll run and do some good for y'all. Otherwise, I'm going to get out of the way and stay technical. Yeah, try harder, Larry. That was too quick. Appreciate that though. Yeah, I'm trying, Larry. I'll go see if I can't. You know, in the old days, when I was in the military, I'm going to tell a story about stealing something. I didn't, but guys were stealing JP4 jet fuel and putting it in their hot rods, and it didn't take but a cup or so and a little tank of gas to make it run like crazy. So I'll see if I can't get some jet fuel in the Forex and get it moving again. Then I'll try that and let you know. Y'all have a blessed day.
Thanks, sir. See ya. All right. Watching for the turn. Maybe it'll hit the 1,000. Maybe it won't. Once again, we're here at this level. Do you think they know that level? Gee, I wonder if the bankers know that level. I don't know, man. That's Scott. He's so lucky. He just puts a line on there, and sure enough, they go right to that line. So I didn't put the line there. They told me where to put the line. All right. We're looking for a turn down. Will we get it? I don't know. I'm down 17 pips because remember, I entered early because I can't pay attention to it. I have to work. My goal is you, not me. You. I miss a ton of trades that you guys get because I'm talking to you guys and not trading. Because if my focus is on trading and 100% trading, I'm not talking to anybody in here. I'm just trading. So I don't do that. I'm here for you, not for me. Euro New Zealand's giving us over 55 pips now, so you can certainly put an entry order into the downside. All right. You're below the zero line break on the MACD. You've had a MACD break and a T3 break at the same time. When you get a MACD break and a T3 break at the same time, simultaneously like that, it is 82% going to go in that direction, whatever the breakout was. Here's another one to the upside. T3 break. Did it go up? Yes. Here's one to the downside. This one didn't go down, as you can see. All right. So what happened? That's why it's not 100%. All right. Because you get them both ways. All right. Here's one to the upside. Did it go that way? Yes, it did. See that? Here's one to the downside. This one didn't go. It went up. See? So it's not 100%. Well, you know, I'm over here on MT4. I'm on TradingView. Okay. You got a MACD over there. How good is it? Do you know the percentage it works? No. Well, I can tell you it's 66%. 66% of the time it's right. Over here, we're 82%. Do you want 66 or do you want 82? I want 82. And when Abdul did it, it was 90% because it all depends on the real estate of the day you have when you do your work. Well, what work is that? 300 of these. 300 MACD breaks. All right. Well, I don't have a T3. That's right. You don't have a T3. Can I put it on? Yep, but you won't know that setting. I can guarantee you that. You won't know that setting. Took us months to figure that thing out. Months. It's not a standard setting. Nothing here has got a standard setting on it. People always ask us, what's the setting on that? Doesn't matter because it's not a standard setting and we don't give it up. It's proprietary. It's the reason our charts are the most amazing charts in the world. All right. How do you get those bright green when the bulls come in, the bright red when the bears come in? That's behind the scenes. There are 24 indicators back here. Behind here, you can't see. 24 is information overload. All right. You can't, that's why we hide them. That's why it's locked. So that you can't see them, number one, and number two, you can't mess with them because that's the first thing traders do. Well, my setting over here on MT4 is this. I'm going to change it to that. Yeah. Well, how did that setting work for you? It didn't work at all. Oh, well, yeah, but that's the only one I know. All right. Do you want to go research it and figure it out? Nope. Everybody see the ABC? A, B, C. All right. So this one will probably top out here. Now that really changes this trade if you get a close and reverse up here. If you get a close and reverse up here, what do I need? Nothing. You got to close and reverse. What does a close and reverse mean? They close the buy and reverse to the downside. That's what a close and reverse means. All right. So what is my do I need more confirmation? The close and reverse is your confirmation. That's it. And all you got to do is go back in the past and say, well, I don't think he's right. Okay. Close and reverse. Did they go down? Close and reverse right there. Did they go down? Yeah. Close and reverse right there. Did they go down? Yeah. All right. Close and reverse right there. See that? It is. It's running. Equilibrium is running right in there. You're right, Larry. So Larry said, he's pretty astute. Oh, I didn't say that, Larry. I didn't mean to tell you that. You're a pretty smart guy. So Larry said he's seen this. He said, this is equilibrium of this cart right now. That's equilibrium. What's equilibrium? They move below it and they move back up to it. Move above it, move back down to it. Move below it, move back up to it. Move below it, move back up to it. Move above it, move back down to it. Move below it, move back up to it. Move above it, move back down to it. Move below it, move back up to it. Move above it, move back down to it. Move below it, move back up to it. What's next? All right, move back up to it or up here or a turn to the downside. All right, that's it. It's equilibrium running right there. What does equilibrium mean? That means that technically and fundamentally, the absolute correct price for this currency is 1.7628. It is technically and fundamentally priced correctly. All right. Now, they don't want to stay there because they make money off the deviation of price. That's what we make money off of. All right. So they're not going to want to stay there because nobody makes any money. It's correct. It's correctly priced. What do you want to trade? Nothing. There's nothing to trade. All right. Now, remember, we got non-farm payroll this week. So you're going to see a lot of equilibrium. You're going to see the market moving to equilibrium and trying to decide to stay there. Because when you have equilibrium in the market, you have this opportunity to go either way. All right. So you can go up and you can go down. With non-farm payroll, they want to keep their options open. They don't care whether it goes up. They don't care if it goes down. They don't care. We don't either. All right. We're still waiting. 12 minutes to go, folks. All right. We're almost to the 1,000 here. See, just shy of 1,000. Watch for a close and reverse at the 1,000. All right. Watch for it. If it happens, you make a decision. Now, we're trading Euro New Zealand and Pound New Zealand. Both are within 2 pips. Yeah. Both of those are Sydney market currencies. What's the next session? Sydney. That's why we're interested in the Euro New Zealand and the Pound New Zealand. Are we interested in the dollar yen now? Nope. Are we interested in the euro dollar? Nope. Well, they're all European currencies. They won't move for 15 hours. And if you're talking about the euro dollar, it's only moving 12 pips a session. That's all. 12 pips a session. So, we trade the euro dollar about maybe 2 or 3 times a year. Maybe 2 or 3 times a year. It's a dog. It's an absolute dog. The most traded currency in the world, and it goes nowhere. Why is that? Because the dumb money's trading the euro dollar. Why is the dumb money trading the euro dollar? Because it's only 1 pip to get in, man. When you're trading for 5 pips, 1 pip spread is a big deal. All right. When you're trading for 150 pips, it doesn't matter what the spread is. And we're trading for 150 pips this morning and maybe 300. All right. All right. You see, they tagged the 1,000 on that wick. How long were they there? 1 nanosecond. That's all they were there. 1 nanosecond. All right. There's the close and reverse to the downside. You make your decision. Scott, how did you know that? Because the bankers do what they've always done. Right? You got to learn what the bankers do. Well, where is that? That's the past. For every 1 hour you spend live, you need to spend 3 hours back here. All right. So we'll be here an hour and a half today. All right. So that means you have 4.5 hours worth of work that you need to do today, or you fall behind. Are you going to do it? No, you're not going to do it. You got a life. All right. You got a PTA meeting to do. I got a dentist appointment. My proctologist needs to see me. Well, there's a great protest going on downtown. I'm going to go join that. Whatever it is, you got a life. All right. So you have to maximize the time when you're in the charts. So you spend your time in the past, not in the present. Oh, yeah, I'm going to trade an hour and a half. You're done. All right, now take all the rest of your time, go back here and learn how the market moves. This is the school. It's back here. Here's the school. Here's the school. Here's the school. Here's the school. What are they doing? You got to learn it. All right. That's where you learn it. All right. We're here at the 1,000. Will we turn? Remember, this is still equilibrium here. Right. So they may just hang here. They may just say, you know what? We're just hanging here. In which case, I need to get out of my trade. I'm down 18 pips right now. All right. So if it cannot break on this move to the downside here, I'm going to work to get my trade out of break even. Why? Because Sydney isn't for 4 more hours. There's no reason for me to be upside down here for 4 more hours. But if the trade goes in the next 10 minutes, all right, if the trade does break through, I'm going to hold it, because I can hold it and wait for 4 hours as long as it's doing what I want it to do, which is to go down. All right. So a lot of traders go, yeah, but man, break even. Why do you want to break even? Because of risk. We major in risk. We never major in reward. Well, why don't you major in reward? Because we don't have to. We know it before we ever make a trade. We never, ever, ever make a trade unless we know the exit. All right. Best said it best. Dumb money finds an entry and then starts looking for an exit. We find the exit and we start looking for an entry. All right. So there you go. None of this is random. Not a thing on here is random. They are manipulating the market. When they bring it up, it's to go find sellers to the downside in a downtrend. In an uptrend, they bring it down to go find buyers in an uptrend. All right. They follow equilibrium. They do close and reverses. Why did they do that? Because close and reverse allowed them to get out of the buy that they took to get up to the 1,000 and put the same amount of money, put that in the bank and put the same amount of money into the sell. Surprise, surprise. There's a close and reverse at the 1,000. Scott, how did you know that was going to happen? Because bankers do what they've always done. They went up to find sellers. They found some. What if they don't have enough? The next time they come up, they're going to go up to this top up here, because they know they already took the sellers out here. So if they have to go up again, they're going up to there. But as you can see, we got a pretty good movement to the downside. Bulls are still here, though. It's bright green. So there's bulls still fighting it, but the bears are winning the battle, see, because the candle keeps going down. The bulls are here trying to push it up. Why would they do that? Because bulls have an option contract up here. Bears have an option contract down here. Why are they trying to get to those option contracts? Because they pay off in the millions and billions of dollars. Really? Yep. I'll just show it. Then we need to do pip captures. Is Craig here? Still here? Yeah, Craig's still here. Craig, you want to do pip captures? Oh, there he is. Okay. So What was I talking about? I forget what I was talking about. Oh, here, yeah. Options. You got a link right there, takes you to the options. Come down here like that. You click on this little thing right here. It opens up a Google spreadsheet. Here are the options for today. Notice here on the euro, 773 million euros, 556 million euros. Okay. We got any billion? Look at the billions down here in the dollar yen. All right. On Thursday, 1.2 billion, 1.4 billion, 1.1 billion, 1.5 billion, 1.1 billion, 1.3 billion, 1.1 billion. Here over here in the pound dollar, 1 billion. These are payoffs. All right. So they're driving them to these currencies. Do I need to know where they are? Yeah. Here they are. It's built right into the IC. All right. One of the things you might want to check every day is how close am I to a barrier, to a plain vanilla option. Now, these are the plain vanilla. They expire every day at 10 o'clock. All right. At 11 o'clock, which is in 4 minutes, the barrier options expire. All right. So what happens is 4 minutes before that, if they see the barrier option is not going to be hit, they go ahead and drive the currency. All right. If they see it is going to hit, they wait 4 minutes until after it's over with, and then they can go anyway and hit the number because now it doesn't matter. All right. All right, she's pushing down. Doggone that, Scott. Closing reverse right at the 1,000. Gee, Mania, isn't that amazing? That's what you do. You do what the market does statistically. That was a statistical probability of pretty close to 90% that it was going to turn with a close in reverse. All right. I trade statistical probability. What's the problem with retail traders? They don't know the statistical probability. They don't know it. They just gamble. They just use indicators that tell them buy or sell. And that's why they can't win, because they're not trading with the bankers, because they don't know the statistical probability of what they did. You know how I know that? Because if you ever did the statistical probability of your indicator, you would never trade it. All right. Never trade it if you knew that. Oh man, are you kidding me? No. Looking for something here. Let's do session recap, session pep captures for us. Okay. So back up here to the alerts and see if I can find this one. That's the wrong one. All right. Wow, what's going on here? I'll do it here. Okay. So yesterday, all right, I had the dollar index. I said, I have it down, but if it reverses, replot the targets in reverse. Okay. So I had it down yesterday when I did this, was right over in here. All right. If it reverses, replot the targets in reverse. Did it reverse? Yes, it did. All right. So back to the alerts. Then the first one that went after that was this one, the euro yen. All right. So euro yen, we had it going up initially. So because it reversed, you go to the downside. All right. So it doesn't matter what these entry prices are. It's just it's an alert to trade the euro yen. Anybody trade euro yen to the downside, not to the upside, because the dollar reversed. All the alerts are based on what the dollar's doing, just like when you're trading during the day. There you go, Robert, 121, 105.88. Notice that. If you're new in here, he's not here for 5, 8, 10 pips. He's here for hundreds of pips. John's still in from last week. Wow. Okay. Did you trade last night anything, John? Did you trade any other pieces last night? Just give us last night's trades if you traded it. Oh, you already had your orders in. Okay. Anybody else trade UJ to the downside? What did Robert make? 105 pips is times 2. All right. So it's 210 plus 121. That's 3 something plus 88. Almost 400 pips for Robert. All right. Scott, 115. Thomas, 106 plus 5. Robert, 314. All right. Sweet. Look at that. All right. Oh yeah, okay, 314, pretty close. Nice job. Way to go, Robert. All right. You may get the song later, Robert, but here's one just for now. What we got, Craig? Yeah, 314. Yeah, that would be right. No, don't count the 340. That's the total of his other ones. Oh, and there's Andy, 98 and 40 also. All right, good job, Andy. No, the 314 was a total of his up there, so just count as 121. 114. Nice job, everybody. All right. Next one was the UJ. This one right here, UJ. All right. All right. So I already had it as a sell. Why? Because of the dollar going down. All right. So there it is right there. It went down to the pip to its ATR and then down to the next one. All right. So I need dollar yen, Daniel, first. Dollar yen. We'll get that one a little later. Dollar yen to the downside. It was an entry at 155.96, 155.96 right there. Target was 155 even, and it easily went there. All right. All right. Nobody got it except there we go. All right, there you go. Thomas, 80 plus one more. Robert, 143, 93, and 27. Robert, you just, yeah. Oh, that was what your 115 was. Okay. All right. There we go. So that'll change the euro yen and change the dollar yen. So we'll wait for Craig. Okay, wrong data. Okay. UJ, 139.98. Okay, thanks, Andy. All right, Craig, we're throwing you some wrinkles today. By the way, we always have this validated by a third party. I don't take the pip capture, somebody else did. Average is 115. Okay. All right. All right. I'm trying to break his calculator. All right, back to the alerts. The next one was the pound Aussie. All right. Pound dollar, excuse me, pound dollar. All right. And remember, it flipped. So you flip it to the downside. All right. So instead of going up, the dollar flipped, you traded down. It went to the pip to its target from the ATR last night, to the pip. Anybody trade GU down? GU down. All right, nobody traded that. And we had next one was the pound Aussie. And pull it up here. Pound Aussie was a entry price 91.40, stop price. It was down initially and then went up when the dollar went up. So you flip it to the upside. We had it down yesterday because of the channel to the downside. Let's pull this back up and to the pip to its ATR. Should I use the ATR? What do you think? Should I use the ATR? You should use it every day. All right. It's extremely valid. All right. Does it always work? Nope. But it works statistically. Anybody in pound Aussie up? Okay, 121. Thank you. All right. Nobody traded pound Aussie up. All right. We also had the GJ. Here you go, Daniel. All right. We had the GJ yesterday. It was a real estate of the week. In fact, we worked it up last night also. So everybody who's in it is in trade one. And is right now, you see the candles. What should I do? Bank your two positions, hold trade one at break even. All right. Anybody trade pound yen down? 87 for Scott. Nice job. Anybody else? Okay, thanks. Robert, 93 and 53. Wow, Robert, you really cranked it. Chris, 92 and 52. Nice. Way to go. Once again, in from last week. Okay. So you're really trading it as a real estate of the week trade. Nice, Sean. Way to go. And if the GJ goes to target, it's 891 pips total. for one lot. One lot. So multiple lots, you're looking at 4,000 or 5,000 trips. What's the biggest trade we've done? Kay did it. Kay may be here today. Over 8,000 pips. One trade. One trade, 8,000 pips. How about that? All right, what we got, Craig? 103. All right. We had a live trade yesterday on the AJ. All right. And we traded it up yesterday, and it never broke up one time. Remember what I said at the end of the thing? Get it to break even. All right, get it to break even. You had a chance there to get it to break even. All right, then it went down. Anybody try? What's the pip capture on AJ live trade from yesterday? I did get mine out. AJ live trade yesterday. Where are you? Andy and Sabitri. All right. Don't forget, Craig's here every day. He keeps track of who trades what, so you can't bail out on it. Sabitri is not here today, so we won't be able to count it anyway. All right, so we can't count it because Sabitri's not here. All right, all right, and you could have flipped it and taken it to the downside. All right, anybody take AJ to the downside? All right, AJ to the downside. Minus 20 for Andy. Okay, that's not bad, Andy. Considering, remember we were down 21 pips, and I said you need to get this, either take it off or work it to break even. And sure enough, because we could see it was going to flip. How do we know that? Well, we got a MACD, a zero line break to the downside right here, and we were trading it up. See, we had a zero line break up, MACD up. We were trading it up, and then we got a one to the downside. That says get out of the trade. Yeah, very good. Nice job. All right. All right. And last one for me is the New Zealand yen. And New Zealand yen easily went to its target. And then remember we had we have a triple top here. All right. We talked about it yesterday in class. Triple top, watch for the sell. Don't try to trade it up. You got a rising wedge. By the way, when you get a rising wedge on, you leave the rising wedge on. Why? Because in order to work on rising wedges, you're going to need 300 of them. You won't be able to find 300 of them. So when you put one on, leave it there and look at it for 300 times so that your left brain gets it in the brain. All right. Nobody traded New Zealand yen down. All right. How about pound Swissy? Tight trade, but it did go. All right. Pound Swissy to the downside, to the pip to its ATR, then to the next target. That's why you hold to the next target. All right. Anybody trade pound Swissy down? Nobody? All right. So the two Roberts get the song today. There you go. And Scott, I'm throwing you in on that too. There you go. Two Roberts and Scott. My name is Robert Scott, so I got me covered.
Money for nothing.
Money for nothing and the pips for free. There you go. All right, if you traded something else, you'd like to post it, we'd like to see it. We don't count it. Thank you, Craig, as always, for helping us. So looks like well over 350 pips last night. All right, not too bad. And remember, we only counted one lot. So our traders made well over 1,000 pips last night. Well over 1,000 pips. We only counted 300 of them because we only take their one largest, 338. There you go. So we made 338 last night. And that was only one lot. All right. So remember, everybody had 2 or 3 positions in. So easily 500, 600, maybe even 1,000 pips last night. That's how you make money. You don't make money trying to trade for 5, 8 pips. Forget it. Just get out. Just quit trading. No, just quit trading. You're gambling. Go to Monaco. Go to Reno. Go to Las Vegas. Go to Blackpool. Don't trade the Forex if you're a gambler. Gamblers don't make it. All right, nobody traded anything else? All right, there we go. All right, let me do a session recap here. All right, so this recap,